when I go to a drinks party and I get the inevitable question, what do you do for a living? And I tell people I work in insurance, I get one of two responses. The first is they start shifting awkwardly. Their eyes start scanning the room. They're trying to find any way they can to avoid having the most boring conversation of the night. The second is they ask me why their car insurance is so expensive. And being a fintech underwriter, that's not something I can really help with. But I really want to change that. I want to make insurance a little less boring and a little more accessible. So to that point, there's two ways in which I could deliver this presentation. The first is a very insurance-heavy, technical presentation. We can talk about policy wordings, we can talk about claims examples. Or the second is an insurance presentation about the classic Christmas film, Home Alone. And I will leave it completely up to you, the audience, which option we go for. So just by way of a show of hands, who would want to go for the Home Alone option? Perfect. That would be my preferred way of delivering it, and we have got the slides for the Home Alone option, so that's the route we'll go down. But I'm sure you're all sort of wondering why an insurance underwriter is stood on a stage talking to you about Home Alone. Well, it might surprise you to know that the plot of Home Alone and needing insurance has a lot in common. So I want to take you back to 1990. It was the year the Hubble Space Telescope was launched. It was the Football World Cup in Italy. It was the year Nelson Mandela got released from prison. And it was, of course, the year that Home Alone came out. Now, I can't claim to be an avid fan because in December 1990, I was just 18 months old when it came out. But it does hold a real special place for me in my heart. The reason being, when I was growing up, both my mum and dad worked full-time. It meant during the school holidays, we had a babysitter. Now, our babysitter was a lady called Holly in her mid-20s. Holly was the best babysitter a brother and sister could ask for, but she had a very limited video collection. One of the videos she did have was Home Alone. It meant that we watched it in the Easter holidays, the summer holidays. We watched it at all the half terms, and of course, we watched it at Christmas. To just give you a quick run-through of the plot. This is Kevin McAllister. Kevin was meant to be in Paris at Christmas with his family, but due to some mishaps, he ended up getting left behind. His house comes under threat, and he has to do everything he can to protect himself from the burglars that are trying to steal what's in his house. But luckily for Kevin, he's got some great characteristics. He's daring, he's innovative, he's bold, and he's aspirational. And what are fintech businesses? They are daring, innovative, bold, and aspirational. But just like Kevin, Christmas is not as safe as you might think it is. And the same is true in the business world too. There are bad guys that are out there. They want your stuff. These bad guys, they're opportunistic, reckless, and greedy. And in your world, they could be after the data you process, the money you handle, your intellectual property, or you could be getting sued by a business actor. In Home Alone, the bad guys are Harry and Marv, the wet bandits. They are opportunistic, reckless, greedy, and also a little clumsy. But you know they're coming for you. They've scoped out your house. They know you're on your own. You're the golden goose. So what does Kevin do? He puts a battle plan together. Some of you may recognize this from the film. In the business world, the battle plan is your risk management policy. And hopefully yours consists more of paint cans swinging from the ceiling and icy steps. But this is your legal counsel, your contract management, the processes you have in place to keep your business safe. But as you know in the film, Kevin's battle plan only takes him so far. Harry and Marv get access to his house. He escapes to the neighbour's house, but his plan's thwarted. Harry pushes him up against the wall, and Harry threatens to do everything to Kevin that he's done to him. Burn his head, hit him in the face with an iron, but to start things off, bite all of his fingers off. But at that very moment, the scary snow-shoveling neighbour comes in. He hits Harry and Marv over the head, rescuing Kevin from that situation. That's old man Marley. He's experienced, battle-hardened, and steely. That's us. That's your FinTech insurance policy. Now, I'm not saying you don't need a battle plan. Everyone does. Quite frankly, if you don't have risk management, then you're setting yourselves up to fail. But what you do need is a FinTech insurance policy. You need a big snow shovel, something that's going to be there, that's going to save the day when things go out of your control and you can't fix them. But why do you need a FinTech policy? Well, we can put this into some very simple terms. If you were going to insure a car, you wouldn't insure it under a van policy. If you were going to insure a 7-bedroom house, you wouldn't insure it as a 2-bedroom flat. If you're an architect or an engineer, the likelihood is you wouldn't be buying a FinTech policy. But if you're a FinTech, the most appropriate policy is going to be a FinTech insurance policy. If you don't have one, you're opening yourself up to some gaps. You might need to buy multiple insurance policies to provide the coverage you need. This could lead to some sticky situations if something does go wrong. Which policy do you notify? Is it going to be covered? How many claims teams do you have to deal with? Having multiple policies means you have to pay multiple premiums. But in our FinTech policy, we can cover it all in one place. So I know everyone chose the Home Alone option, and thank you, that was the best one to go for, but I can't escape all the insurance jargon. So I will spend a bit of time looking at our insurance policy now, just running through some of the headlines of the coverage. So the first of which is the FinTech professional liability. This is the main insuring clause. This is going to protect you for all of your professional services and your technology errors and omissions. So to just put that into context, if you were an insurtech, say, the professional services element would be you acting as an insurance intermediary. Our policy would cover that in its own right. And it would also provide that tech E&O cover as well. If there were issues with the software you created, if there were bugs in that software, then our policy would respond to any issues in that technology exposure too. Directors and officers. As directors of a business, you could find yourselves legally liable for any negligence within the business, personally. So we throw D&O cover in there to protect you as the directors of that business. Cyber. Every business has a cyber exposure, and FinTechs have a more heightened one than other areas of the working world. You're usually providing a service direct to consumers. That means you might be collecting their data directly or processing their data on behalf of third parties. But FinTechs, by their very nature, are very data heavy. That's why it's so important to have a really robust cyber coverage. Crime is exactly the same. A lot of the businesses here are going to be in the payment space. The way that you handle money is going to be very different from one business to another. You might be holding it for a very short amount of time. You might be holding it with third-party banking partners, or you might be holding it in your care, custody, and control in some way, shape, or form. And that's why we've really made it clear and really have broad coverage in respect to the crime section. In the UK, we're lucky to have the FCA. I say lucky, but most businesses that we see are regulated. So we have affirmative regulatory cover in our policy wording. That covers you in the event of a regulatory investigation. And we can also do some additional covers in there as well to build out the full suite of coverage. EL, GL, material damage, and business interruption. As I said, it's all contained in one policy form. This means that you can take any elements of this cover as and when you need it, and it's suitable from businesses right from their startup phase, one employee, no customers, all the way through to a business with 100 million in revenue. There's only one form to fill out. There's only one broker to work with. There's only one claims team to deal with, and there's only one premium to pay. Now, it's all well and good telling you just how good this policy is in design, but what I actually want to do very quickly is run through a real-life claims example that we've had, an issue that a business we insured faced. They were a money management app. You could see all your finances in one place, but alongside that, they also had the ability to invest in stocks and shares. They did that through an integration with a third-party broker. Now, some not-so-friendly individuals managed to find a weakness in the system. They took advantage of it. They bought stocks and shares that they didn't actually have the funds for, but they were able to sell them immediately and to be paid real-life funds for the sale of those shares. So we've suddenly got this loss occurring. There's money going out of the business, but the money hasn't come in the first place. Luckily, the insured was great. They noticed this really quickly. They notified us, and we managed to put a stop to the issue in the short term. But in the longer term, we needed to work out what happened. So we first of all looked to our crime section of our wording. Money had been stolen. Is the crime section going to respond? But actually, the system was breached. Had there been a weakness in the cybersecurity? Had someone got in and had there been a cyber attack? Or was this a problem with the software? Had someone found a bug and exploited it and was able to do that through an issue with the software? Throughout our claims process, we looked at each of those coverage sections individually, and we thought it may have been covered under each one at any given time. Luckily for the insured, it didn't matter because they bought our policy with CFC. It was going to be covered regardless of what happened and where we decided it was going to attach. It did ultimately end up being a technology error. There was an issue in their code which allowed that money to be stolen, but we fixed it. We were able to indemnify everyone very quickly, and the claim was put to bed in no time at all. So I touched on cyber being such a huge exposure to fintechs as well. And the cyber market in its own right is changing completely. I want you to imagine a world where you have a cyber insurer that is actually lurking on the dark web, trying to find data that may have been leaked onto there. Imagine a cyber insurer that is actively scanning your networks to find any vulnerabilities that might be open to everyone. And imagine a cyber insurer that's able to use 20 decades of data to be able to know where the next losses are going to come from. Well, there's no need to imagine. That's exactly what CFC do. And if you buy cyber cover as part of the FinTech policy, then you have access to all of those services at no additional premium. As well as us being proactive to stop a cyber attack before it even happens, we're also there to be on hand when something does go wrong. We've got a 24/7, 365-day-a-year incident response service. 130 individuals that are all working in-house with us to help respond to any incidents at any time of day that they might happen to your business. I'm sure you can all agree what a real strong offering this is for fintechs. I'm really passionate about insurance, and I'm really, really passionate around the solution that we've created. I feel like it's so fit for purpose and so good for, and appropriate for what businesses need. At CFC, we're always innovating to be at the forefront of insurance. And just like you, we're innovative, bold, and aspirational. Now, I am around for the whole of these next 2 days, so please do come and find me, ask me any of your insurance questions. Please don't ask me about your car insurance. I'd just like to leave you with one final thought, and it's something that's bugged me for my whole 35 years of watching this film. What exactly did Kevin's dad do to have a house like this and to be able to take his whole family to Paris for Christmas? Thank you very much.
You absolutely stole my line. That's exactly the question I was going to ask, and I don't think anyone yet knows. Although that house did come on the market recently.
It did, apparently.
Did you see that online?
It's on Airbnb as well, so if you're ever in the area, you can book it.
But unfortunately, whoever's last owned it absolutely gutted it, and it looks nothing like it should do. So let's all come together, buy it, renovate it. Anyway, I digress. I get distracted really quickly. Any questions from the room? Because I know I have some for you. Any immediate ones? Yes, we do. Is this Home Alone based, or is it to do with insurance?
What's the most common claimed thing within that policy, would you say?
I'd say that we have the most frequency in crime claims. And I think that's to my point of how exposed fintechs are to money in ways that we're seeing new and creative things every day. So having that robust crime coverage is really important to make sure we cover all elements of those funds being stolen or misused. And that's definitely where we see the most frequency. Luckily, most businesses are able to catch these incidents early, so they don't end up becoming too large in their own right, but there is a high frequency of them.
Any further questions from the room? No, I have one in particular. And the fintech industry moving so quickly, the cyber threats perspective moving so quickly, how do you make sure the policies remain fit for purpose when it's in such a fast-moving environment?
So we have CFC, we have a whole team that works on our policy wordings. We've been doing especially cyber insurance for over 20 years now, and we've got really good at adapting to those changes and understanding risk better than some of our competitors. We're also agile enough to be able to launch things very, very quickly. Something we've actually done recently is looking to provide affirmative cover for APP fraud losses in line with the legislation that's come, so many people in that room will be aware of that. We were able to roll out specific coverage for that element within a 2-3 week period to make sure we can actually provide that cover to our clients. And the same is true for all lines of cover.
Okay, Steve, thank you very much indeed. And I have a challenge for you for this time next year. If we can do a full insurance breakdown on the repercussions of the Christmas film Office Christmas Party. And if anyone has seen that, you'll know that would be a very interesting presentation. Steve Bowers, thank you very much for joining us.
Perfect, thank you.